frauds, like you said, are taking different shapes and forms, right? This is a show about how finance professionals need to be cognizant of such things, and how an ethical finance professional or a CA should be aware of these financial frauds. But for me, Robin, what is the incentive for them to be ethical, number one? What is the incentive to go report or whistleblow on such things, right? What is the mechanism that we have to build?
If a business is lost, if a business has to last a long period, ethics is the superstructure on which businesses last. If you look at companies which have lasted more than 100 years, like say Walmart, for example, Shalimar Pets in India, for example, Times of India, for example, you can go on and on, Tata's, for example, you can go on and on. You will find that normally these businesses have been built on ethics. There could be some blunders here and there, plundering, that's fine. But broadly, they would have done under good governance principles. Now, who should get it right? Management should get it right. But if they're themselves involved in hanky-panky, then why should they get it right? The second best bet is the finance community. They must get it right. And why they should get it right? Because finance is protecting the assets of an organization. That's what a CFO is supposed to do. That's what the CFO team is supposed to do. Now, even that layer fails. The third layer, perhaps, is the whistleblowers. Some employee, most of the time it's an employee who is an insider, who figures out another employee is doing some hanky-panky, but I'm not getting a due share. Let me blow a damn whistle, and things might just go out. So normally you will find a whistleblower is an insider. There have been cases where a customer also whistleblows, but there are very less instances of that. So in essence, that if an organization has to live for long, which is the purpose of everybody, including you and me, we all want to live long. We don't want to live short. And organizations, of course, wants to live long. Therefore, the first layer of defense, to my mind, is management, which is the board and the senior management. They must set things right. If that fails, then the finance team must set it right. If that fails, perhaps the whistleblower should set it right. If everything fails, perhaps the government sets it right. When they do an investigation or when the income tax returns are filed, they figure out that the income tax returns are falsified. Or when the balance sheet and profit and loss account are signed by a chartered accountant, they might find that things may not be right. Also, the auditing community, for instance, can also set things right. There are those 4 or 5 layers. So having said that, the most popular method of finding and setting it right is whistleblowers, for sure. Finance team, no question. And to my mind, the primary responsibility lies with the management team, who must set right of ethical governance in the organization.